Let's do a comparison between SPY, SPX, and ES. The ES is at 2270.75, the SPX is at 2276, and the SPY is at 227. These three are following the S&P 500 index closely. For SPY, $1 move is equivalent to $100, and for ES, 1 point move is equivalent to 50, and SPX, 1 point move is equivalent to 100. With the SPY trading at 227.21, the value of the SPY is 22,000. Likewise, for ES trading at 2270.75, the value is at 113,000. How did I get this value? Because 1 point in ES is $50, we take the figure multiplied by 50 and you'll get this value. And for SPX, the value is $227,000. If you were to buy SPY and SPY drop to 0, you'll be losing 22,000. And for SPX, if you were to buy SPX and it dropped to 0, you'll be losing 227,000. Will the market ever drop to 0? Unlikely, but not impossible. But it doesn't mean that you need this amount before you can start trading the market. The contract uses margin to trade, so you do not need the full amount to be able to trade the market. For SPY, it is a regular trading hour. When the stock market open and when the stock market close, SPY you can trade. It is an American option, which means that the option can be exercised before expiration. SPX is also a regular trading hour, but it is a European option, which means if the option is in the money, the buyer is not able to exercise it, and it will be cash settled on expiration. All European options will be cash settled at the end of the expiration. It means if a position is making money, the profit will be put into the trading account, and if the position is losing money, the loss will be deducted accordingly. The trading hour for ES is almost 24 hours, just like the Forex market. There is a 15-minute break in between. If you check the CME website, you can get the exact trading hour of the Emini S&P 500. Apart from Saturday and Sunday, on the weekday they trade almost 24 hours. It is also an American option, which means that the buyer can exercise the option before expiration if they want. And because it is an American option, if you are being assigned the option, you'll be either long or short the ES, depending on whether you sell a call or you sell a put. There's a few advantages of trading ES. ES is considered one of the most liquid futures contract, and it trades almost 24 hours. We don't have to trade 24 hours to make money on ES. But the advantage of a market being open for 24 hours, you are able to exit the trade if the trade is against you. And this is a very important point. Because for the other market like SPY or SPX, when the market close, between the market close and the next day opening, the market does move and things does happen. If there's an overnight event that is happening, you are not able to get out of your SPY or SPX because the market is not open. And by the time the market open, it either gap up or gap down. And by the time when you exit your trade, it is not in favor to you. But for ES, because it is traded 24 hours, which means if something happened overnight, you do have a choice. If the market is against you, you can get out or you can wait until the stock market open. But this choice is a good advantage for those that is trading ES. And the other thing is that for ES, they use spend margin and not regular margin. That is also an advantage because it offers you more leverage. But leverage is a double-edged sword. So when we use it, you got to use it wisely. I'll be talking more about spend margin and regular margin in another video. If you have any question between ES, SPX and SPY, just leave a message on the forum.